Hello traders, Nick Shaheen here for Benzinga and create income with option spreads on MarketFi, recapping week ending June 20th and looking into next week, what we're going to do. As usual, pretty eventful week. And before I get into it, um, I'd like you to take a minute, write down my email. It's selfspreads@gmail.com. It's right here on the screen. And also, you can follow me on Twitter and StockTwits. I have the same handle on both, RacerNick. Check us out also on MarketFi if you are not already a member. And you can also register there in order to get my messages. And also, you can reach me via messaging through the MarketFi messaging system. It's pretty good. So again, selfspreads@gmail.com or Twitter, and most importantly, MarketFi. Good people helping everybody. So that being said, let's delve into today. Bullish day seems like everybody wanted to buy everything, or the media is all about, oh, we're at all-time high this and all-time high that. But to me, it didn't feel that bullish. How come? Well, there was a lot of red. There were a lot of important names that were red. There was weakness most of the day, except for the last few minute run up. We had Apple down, and Apple has been darling for a while recently. And Google had pressure all day long, although it recovered weirdly. Some strange action there going on. Um, Also, Priceline was weak. Amazon was giving back. A whole bunch of red names that I would expect have, if they were buying risk, they would be on the shopping list, but they weren't. So a little caution there, obviously. What else is caution? I had a long list in the write-up, and it was a laundry list of things, but most importantly, geopolitically. The whole world is just a couple headlines away from a couple of wars on two different continents involving many nations. We've got headlines creeping in from Ukraine, Russia building, reports of Russia building troops along the borders with Ukraine. That's new. And also some holy war going on, or potentially going on, if the insurgents in Iraq decide to go one way or another. So, in other words, we do have potential pitfalls. This is geopolitically. Another worry point is obviously the Japanese. It's all an experiment as far as economics are concerned. Who knows how that's going to end? And speaking of loose money, we have loose money everywhere and getting looser. The United States has been loose for a while, and now there's talk of being anti-loose, which is tightening, and that's also bearish. That's another point of concern. I mean, they're going to have to raise rates sooner or later. When, I don't know. She said to ignore CPI, which is a major red flag for me. How could you ignore CPI? I mean, it shows up on my shopping list every day, every time I go shopping. I'll use milk as an example. I use gas. I haven't seen gas under $4 in California, and I can't remember how long. So all scary stuff. And ECB just jumping on the bandwagon of being super extra mega uber loose by going negative on the rates. Banks will pay money in order to hang on to money, which is pretty insane concept. But so we do have things to worry about. Super low VIX, and today luckily it went down, and then luckily it rebounded and closed a little higher, I think 1.4%. So we had green markets, green VIX. Strange. It has happened a handful of times this year, so it's not a complete flag. But I am watching a few trends, and let's look at the day. First of all, let's recap the day. Members get pre-opening notes from me, and let's revisit how we did on those. Ahead of every day, I send out levels in play, and today we were not disappointed. We got the chance to work on all of those levels. So let's see, I've got many windows open to see who I can. Okay, let's start with SPX. Yeah, why not? Do the 5 minutes. The SPX I said would pin, looking to pin this 1960, closed 1963. Settlement value was higher than the high of day, and one of my members noted, how could that be? Mojo on AM settlement. That's why I always close on Thursday, all AM settled credit spreads. You never know what's going to happen at the open, and the open is not really the open. So anyway, long story short, I have a long answer I found for you. How could the settlement value be higher than the higher day? So, but the pin was, $2, $3 away from. So we were in the ballpark, and we had that pin kind of going the whole week. And then, more importantly, the SPY. They leaned on the SPY, and we thought they were going to. But we also knew that 196, it's going to find support at 196, and it closed 6 pennies away, so that was a good call there. So if anybody had some plays on the SPY, they could have benefited greatly from this bit of information. The IWM, which is a small cap, we thought that it was going to have two magnets, one at right here at 117 and a half and 118 and a half. Okay, so, and I said that it has the least path of resistance is downwards. So it opened, it went down to the least path of resistance to almost exactly 117.50, and then it bounced and it hunted the upper end of things, which was 118.50, and it closed 118.25. So, all the levels came into play. I thought for sure Google was going to top off the Goog at 550, and we made a bet on it right here. Whoops, didn't mean to do that. That was supposed to be a pen. So we made a bet on it right here and cashed in the bet on the way down. I cashed in a little early, and then I reset the bet later in the day, which I shouldn't have, with house's money. So I figured, okay, now I'm pretty confident that 550 should be the top. I didn't, but for some reason this run up here happened that defies logic, and look at that, which coincides right up here. So this is probably not a coincidence right there. So this is Mojo Bay, way beyond my pay structure. So market makers at play. So not for me. I ended up with a push on the daily, but it was a lotto play, so no big deal there. I didn't lose money at least. So Apple. Why don't we look at the fruit company? Actually, it's right up here. This is Apple. It was down 1%. So I thought that the Apple was going to struggle with 92.87, I think, and I've said it all week, and it sure stood. Even faced, it couldn't rally and break out of it with headlines yesterday and today. And this was the headlines yesterday and today. So I think this was the rekindling of the headlines and the regurgitation of it here today. So I watch or not, I wrote up a beautiful article, beautiful because it made me feel better about what I'm writing, and a long-term big picture on Apple, what's next kind of a deal. If you haven't seen it on MarketFi, hunt it down and get it. So I said it was going to fail at 92.87 and hunt down a couple of levels and eventually hunt down 91.5, and it did, 91.4 something, and it did, and then for some reason right at the end, kind of like the opposite of the Google move. We used to have a pair trade going on for a while. Maybe that's it. Maybe it rekindled. Look, it's almost exactly at the same time. So we used to have a pair trade in 2013 on big whooshes in Google or Apple. They would trade inversely. It's kind of like one bucket of money going from one into the other. So Apple had a tough day, and it's going to have a drag. I said in the write-up on Apple is the fact that it's going to drag on the indices because it had an incredible run-up, and let's see if we can do that here. Incredible run-up in Apple. So from 417 on up, it went up 25% or so. I forget where I stopped measuring, and that accounted for a huge chunk of the run up in the chart before that, which was the run up in the Nasdaq. So based on the conservative measurement, so a big chunk of it is gone. If Apple, now this is the old level. Just to give you perspective, let me zoom out to 5 years. Okay, this is the 700 level right here, where Apple fell out of sorts and everybody hated it. Everybody loved it right here. Everybody hated it right here, and they should have been the opposite. Everybody should have hated it up here. Everybody should have loved it down here. I didn't hate it up here, but when everybody did and it came down to here, I loved it and I went long it and made some money on that a couple of times. And then the pivot, another pivot is the 505 level. and which is this big green one. They're going to defend it. So now everybody's going to hit it up here, unless it delivers a flying car, and that's the spirit of my write-up. So is it a flying car or is it not? I'll leave you hanging with the suspense. But it's the closer. My point is, the closer it gets to the 700 level, which is the 100, at that area, love is going to wane for it. It's going to, they're going to fewer people liking it, or at least to start liking it here. And this is kind of like a rounding bottom cup and handle-ish formation right here. Measured move would have probably been right around here, so, or thereabouts. So you can say, okay, it fulfilled itself. So technically also that supports the theory. So regardless, we have things to worry about. We have some drags potentially, but we also have some good things going on, right? Because if you look at the SPY, let me zoom back into one here. So I had the dashed blue ascending wedge, which is usually bearish, but here it poked its head up above it, but then reverted right back to it, and now it bounced off of it. So it's looking threatening, and it's looking pretty bullish from here with a big upside move. Same in the IWM, it's looking pretty bullish, and it's technically speaking some sort of a cup and handle going on. But I also highlight the green level right here, from which it failed. 3 peaks, 4 or 5 peaks, whatever. So I want to see how it handles that level before I start counting my money on a huge move up. Okay, so but if it does break that, it's got some good upside from there. But when all the markets at all-time highs, the markets would really need a reason to run. So this is a drag as well. So yeah, it's threatening, but I'm not going to put my new money on the line long unless I get a confirmation of that. I'd rather miss a few dollars on the upside than get in too soon. So what am I going to do next week? I'm going to say, okay, the bulls are stubborn, but the bears are not scared. Who's going to win the fight? I think the fight at 1950 lingers, and I think the bulls have the edge as to where the bears are not able to sell it off, but yet the bulls are not able to completely obliterate the bears 2013 style. So what am I going to do? I'm going to try to sell some spreads. Let's take the SPX for example. I want to be aggressive, and I'm going to try to sell the SPX right around where the fight line is, which probably pay me about $1. I'm doing that because I have a couple of short positions that I want to hedge just in case. But I'm going to hedge my hedge. How so? The short positions are longer term, so I'm going to try to do some sort of an iron condor in SPX, for example, and IWM or SPY. You can play all of them or any of them. And I'm going to give some room on the lower side, but more room on the upside. This will give me time to react on the lower side and cancel the whole thing without major damage, but doesn't add too much to my bearish risk. So if I don't want to be too bearish is what I'm trying to say. So that's the overall theme. So I'm going to find some, boy, a lot of lines on this guy. I'm going to find some trades I can do to bring in some bullish money in order to finance more bearish money long term. So I want to probably take that money and start to invest in some SPX puts, for example. Longer term puts, why not? If I think that the SPX is starting to get tired, let's see if I can zoom out here. Why not start building some put positions? Because I know a lot of the puts a lot of the credit call spreads that got blown out from a couple weeks ago, people fought the 1900 level so long they got complacent, shorting it at 1900 without building a buffer, waited too long to roll, and then they rolled, and then they rolled again, and now they rolled again. But the fight is still at 1950, and I don't know if they gave up the 1850 level yet. So I'm going to get behind the bulls at 1950, close to it. But I want to be with the bears longer term, that okay, we're going to sell off at some point, so maybe even sell some really out risk shorting the market to finance some medium term, couple of months worth of time of puts or put spreads to anticipate a whoosh at some point downwards. So that's the overall strategy. I'm going to hang up here and finish a longer video for the members with more specific trades on portfolio trades that we have and are anticipating. But meanwhile, good day. We had some good plays going on, and the overall market action looks, although uncertain, the ranges are fairly static. So yes, there's uncertainty, the TNX, the TLT, the yen, this and that, but the ranges have been somewhat stable. Of course, we're going to all get surprised one day, but until that happens, hopefully we're nimble enough to get out of it without too much damage. Thank you for your time, and we'll talk to you next week. 15 minutes and 30 seconds. I lost by 30 seconds. Again, this is Nick for Benzinga and MarketFi, create income with option spreads.